You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Joe Benazzi from OptionPit.com, and Henry the Flowmaster Schwartz from Cboe. The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again. It is time to rock out with the Thursday edition of everyone's favorite bi-weekly source for all things options related. Yup, it is time for the Option Block. My name, of course, Mark Longo from theoptionsinsider.com, as well as on the network upon which all of you folks are tastefully binging out there these days. Usually 3 shows coming at you a day, if not more. For all you hardcores out there, make sure you're subscribed to the full network, wherever you get your favorite podcasts. And of course, if you want to check out cool things like, I don't know, brand new cutting edge research on unusual activity before it is released to academia and indeed to the masses, we did that on Tuesday with our buddy Dr. Vix. Our pro folks already got that in their hot little hands. That was pretty darn cool, if I do say so myself. If you want cool exclusives like that, oddities, live streams, giveaways, play along in our fantasy football, you too can have the chance to take it to Uncle Mike. What's more fun than that? The optionsinsider.com/pro is the place to go to get all of that as we go around the horn and see who's joining us on the old fantasy football squad, the gridiron of life, known as the Option Block out there, listeners. First, let's go out to the hinterlands of Chicago, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike Tosaw, looking to make a little bit of a comeback on the gridiron this week. I guess you had a bad encounter with Mr. Overby, and now you're looking to make a comeback, sir. It's been a rough go for your crypto lovers.
It has. So the crypto lovers are 1-2 on the year. It wasn't this last week, but it was the week before that the Iron Condors edged me out in typical Iron Condor fashion by just like less than a point. So I guess it just goes to show you, if it's Condors versus crypto, you want to go with the Condors.
Oh, there we go. Over B. We shall see. We shall see. I haven't played him yet, but I look forward to taking him on. We had my first setback this week against the mighty options/football queen herself, who is, I do believe, undefeated in the league. So she is quite the juggernaut. I look forward to your clash with her, Uncle Mike, as we keep on rolling out to the lands of Cboe East, where he is not playing in our league. Maybe next year we'll get the Flowmaster in there. I would enjoy clashing with him on the gridiron of ideas known as fantasy football. Mr. Flowmaster, a.k.a. Henry Schwartz from the Cboe. How are things, sir?
Everything's good. I will. I'll play next year. You just have to give me some tutorials on how it all works.
On football? Okay, this is football. Yeah. This is a running back.
Well,
yeah, we'll
I
give you one.
understand how football works, but not when you pick players from different teams. No, I am doing great. It's a little rainy day in New York City today. I was markets are active. We went up to Greenwich, Connecticut to visit a few customers yesterday. That kind of reminded me of Beverly Hills. It is quite a wealthy area up there.
Good old Greenwich. Which, as someone from Connecticut, we hate Greenwich and Stamford because everyone thinks all of Connecticut is Greenwich and Stamford. And I remember when I first rolled into the pits of the Cboe, like, oh, Connecticut, you're a trust fund baby. And I'd be like, you've never been to Connecticut, have you? You've only been to maybe Stamford or Greenwich, where even the McDonald's in Greenwich, it has wrought iron and brass and gold everywhere. It's just a wild place. And speaking of wild, are these markets wild? Let's find out. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading out there. And I don't know, I'm kind of worried. I was only half joking with Uncle Mike earlier. I really wanted to engage with him early because I am kind of worried about him. I might need to send a team out to his house just to do a proof of life because we're seeing a color on this screen that we're not really accustomed to seeing. He also can't come on here and make his seemingly endless pronouncement show after show. It's never been a better time to sell stocks because we're going down. Listen, I know it's weird, right? I didn't think that could happen. S&P off about 0.5%, threatening, I can't believe it, threatening to break below 6,600. Insanity. How do you handle the pain? Dow off about 0.25%, NASDAQ off about 0.5% as well. VIX cash was hanging out at around a 16.5. That puts it up about 0.6 of a point right before we started the show. Starting to flirt with a 16 3/4 right now, which would put it up nearly 0.8 of a point out there. So getting a little bit firmer, a little bit spicier out there. VVIX hanging out at a 99, still kind of unched, which just shows you for a while that VVIX has been kind of one of the lone indicators out there that's maybe showing, I don't know, maybe all is not right with the world. It's been stubbornly persistent at the high 90s threatening par level for a while and kind of refuses to budge, which is kind of interesting out there. But we got to go back to the hinterlands of St. Charles first. He might be doing some self-harm to himself as we speak. Mr. Uncle Mike, how do you handle the pain of red on the screen and maybe, dare I say it, going below 6,600, sir, in the S&P?
Well, it's interesting. So the markets today, we started off just went way down to 6,675. We rally, and then we've just kind of been channeling between roughly 6,600 and 6,620 for pretty much most of the day since about an hour into the market. We've just been channeling. And so it looks like we're going to break out to the upside, but it looks like we're going to break down to the low side. And so it just hasn't happened as of yet. So I just need to call on all my Facebook cabals and Twitter cabals and whatever. I don't even know what a cabal is, but Mark Longo, the Walking Thesaurus, says that I have a cabal. So I guess I have a cabal, but we need to get some buyers in here. But on a serious note, for the longer term, we've had such an insane rally recently. Last week, I actually was, for my monthly protective puts, I think I was talking a little bit about it on the show Monday, I've tightened up the protection a little bit just because the risk reward makes sense to do so, in my opinion. We're going to get a pullback at some point, whether it happens today, tomorrow, or just the fact that we're down roughly 30 points on the week or something like that in the S&P. It's not going to go straight up forever. And so you need to be prepared for something like that. The thing that does seem like it's going straight up forever recently, the precious metals. Silver's up another 2% on the day, with SLV flirting in the high 40s. This is actually kind of a different world for me right now. Silver's actually moving to the upside, and we're past a lot of my silver covered calls finally. It's been a wonderful collar market in silver for the last couple of years, and that I just keep rolling up the collars. It doesn't go up a ton, it goes up a little bit. I roll up the collar, and then now it's actually gone through my short strike price. So pretty interesting times in silver. Maybe we'll get some silver content for the show, but in reality, I'm just going to sit on it because I have such a large profit on it. I'm just going to let it get called away.
Don't make promises you can't keep on the content side. So we've been down that road before with promises of silver content.
That's what I was thinking, because for those of you longtime listeners, you remember I busted out this silver collar about 8 or 9 years ago. I'm thinking Mark, silver's going to be my next Apple, because when we were talking about my Apple collar nearly daily on the show in the early years, I'm like, silver's my next Apple. Silver never did anything. It went up, but it just became all of a sudden very boring. And so we didn't have it.
Just be happy with your ill-gotten gains in silver, sir.
Yeah, pretty much. That's how it's going to be. But with that, the other thing that I'm continuing to watch are the bonds. And with interest rates a little bit lower now than they were a few weeks ago, we have some buyers in the bond market. But we'll see if this continues. Today, the bonds are down a little bit. We have some selling going on. But I think the bonds, like I've said, I think that's going to be the true story of the market over the next few weeks. Not a ton of things going on, but in the age with which we live, whenever there's not a ton of things going on in the near future, there's probably going to be a ton of things going on. And that is my take for today.
All right, Mr. Flowmaster, same question for you. An interesting week, an interesting day, a color we're not that accustomed to showing up on our screen. Good old blood red. What is catching your eye out there, sir?
Well, I agree with Mike. I mean, we're still up. We're still up 12% year to date for the S&P.
No, the sky is falling. Go hide.
It is telling though that your notes said we were green on the day, because you were just stuck in this like, well, we're always green on the day.
Just cut and paste, baby.
Exactly. I think that I kind of feel the same way. This is a little bit of a healthy pullback. If anybody had any money they were thinking about putting in and they hadn't done it in the last few weeks, they just felt like idiots. And now, maybe like, okay, a little bit of a pullback. You didn't buy the absolute all-time high. I agree. There's some macro things going on. Nothing much has changed there. In general, VIX at 16 something is, realized vol is still in the, barely above 10%. So it has been a pretty quiet market. We're not seeing any panic at all in terms of, what the market's doing. We are kind of heading into we got one more week or so in the third quarter, and then we go into the fourth quarter, and that usually is the time that people that are sitting on gains, they start to say, oh, geez, I certainly want to lock these things in so that I know I'm going to get a nice solid bonus year to date. So we're really not seeing a ton of that. I mean, the index activity, 0DT has been very strong as it has been for the last year and a half or so. But the overall index volume, has not really been that strong. That's not really where this where things have been focused lately. It's been a single stock story. It's been kind of canceling out for the purposes of the indexes. We saw that I think last week when we talked. Russell was really outperforming, and so that's kind of an interest rate play. So I think it's nice to see the market go down a little bit, because I actually made a joke to my colleague Mandy Zhu. I was like, maybe we should do a little let's talk about complacency and like just kind of click the boxes, right? Volatility is low, skew is flat, market just keeps going up, double digit increases for more than 10 or 20 names a day, upside skew and a lot of single names, because it really felt like equities are great, and it's definitely where people should have their money for the long haul. But when we see, we're 30% off of the bottom in April, 30%. That's a pretty big move for the S&P 500.
You bring up something interesting that kind of was brought up on our Futures Rundown show yesterday by one of our guests, and something I've been kind of mulling over as well. We mentioned at the top of the show, you just mentioned VIX cash kind of hanging out in the 16 to 17 handle, not exactly signaling crazy wild times afoot out there. Realize vol not exactly crazy either, so it makes some sense. But then we have precious metals, especially gold, hitting new all-time highs almost daily, kind of signaling that the end is nigh, the end is afoot, which kind of raised an interesting question on our Futures Rundown show. Is gold the new fear gauge? Is gold a better indicator of anxiety out there right now than VIX out there? Mr. Uncle Mike, what are your thoughts on that? Gold or VIX? Which one's the better fear gauge, quote unquote, right now, sir?
Well, first off, I have to address a comment by the Flowmaster when he said it's good to see the market go down sometimes. I have to say I disagree with that part. But
fighting words.
It's never good to see the market go down. It should be going up by 20 points every day, 40 on Fridays. Anyway, I'm just kidding. But no, I think that the VIX is still going to be a better fear gauge because, yes, gold's been making all-time highs, and yes, the market's been making all-time highs, but we're continuing to make all-time highs. So I'm still going to go with VIX as my number one fear gauge.
Mr. Flowmaster, is gold stealing a bit of VIX's thunder right now? Is that the new, let's call it anxiety meter? How about that?
I think it's worth keeping on the radar. I mean, we know what the VIX is, and you get the VIX 9-day and the VIX 1-day. These are all very useful, but you also have these currency, the dollar issue, right? And that is where that's where you kind of see. I think it is worth keeping an eye on in gold and all commodities, but it is interesting on a day like today where we got Bitcoin down and the equities generally down across the board, but not the metal.
Interesting stuff. That might show up on one of our questions of the week going forward. Maybe next week, listeners, we'll get your pulse on whether gold is your new anxiety gauge, or is it VIX, the old fear gauge that is still leading the dance out there. You know what VIX is not leading right now is any sort of appreciable volume. VIX, after just smoking for a while, going into the Fed, coming out of the Fed, getting the ADV up to over 900,000, I think in the ballpark of 950, which when VIX is threatening 1 million contracts a day, that is, I think the technical term is a ridiculous amount of paper. That is difficult to sustain. I said that a few weeks ago. I said, I wouldn't be surprised to see the ADV and VIX come back to earth. And it's starting to do that. It's still 837 today, but VIX this week just can't seem to do anything. And if I was looking at these numbers right now, apropos of nothing else, I would think we were hanging out in the dog days of summer or maybe mid-December. That's how light we're looking. 243 on the tape, and that's only the result of some recent paper out there. We've had many days this time of the show where VIX has put up 100-something thousand contracts. So very light business out there today in VIX land. That said, there was one interesting print going up today. 20,000 of the Nove 16 puts going up for 47 cents. So you know what we have to do, listeners. This just went live a few seconds ago, so we literally don't have any results yet. That's how new it is. But we said, hey, you like those? Are you a buyer, a seller? Are you a seller in a spread or a buyer in a spread? We'll let you know a little bit later how you folks are feeling about the Nove 16 puts. Now, contrast VIX. You might say, well, the whole market is just doing nothing. And that would be incorrect, listeners, because SPY is banging out of the gate nearly 6 million contracts, 5.8 million contracts. The ADV about 7 3/4. So SPY looking hot. VIX roaring out of the gate, 2 3/4 million contracts. The ADV a little bit north of 5. So VIX and SPY roaring out of the gate. What about small caps, you might ask? Oh, also roaring out of the gate. 1.15 million contracts out there. The ADV 1.5 million. The Flowmaster's right. There's been some kind of div play action and other stuff out there of late that's kind of been gumming up the works a little bit volume-wise out there, but still a very hot day. And what about the Qs, you might say? Well, the Qs north of 3 million contracts as well. The ADV 4.1 million. So today is a banger day for every major index large product with the exception of VIX. Mr. Flowmaster, I'm curious if you have any thoughts on this, because it's been now a little bit where we've seen VIX kind of struggling to get out of the gate every day after averaging nearly 1 million contracts a day. Not that long ago, Mr. Flowmaster. Do you have any thoughts on that? A day when we're seeing SPY and the S, crucially, putting up banger numbers and the VIX can't seem to get out of bed, sir.
Yeah, it's definitely been a quiet since last Friday, really. I'm not sure if, like I said, kind of you go into the quarter end, I think a lot of people kind of start to do some planning and trying to figure out what hedge they want to put on for year end. So, I'm not sure. It's definitely, and it's not just calls that are light, like calls and puts are both pretty light in there. We talk about this sometimes, like there's kind of a sweet spot for VIX. When it's too low, if it's 14 or 15, the volume gets a little bit dampened. And when it's like above 35 or 40, it also gets a little bit quiet. So I think we'll probably see I think we'll see things pick up at the beginning of the next quarter in VIX. And, when people are kind of engineering the hedges they want.
Let's see what folks are engineering on the single name, shall we? Is it a banger day? The answer is yeah. It's actually surprisingly robust. In fact, let's not undersell it. Let's make sure I get the up to the second numbers out here, listeners. Yeah, it's costing you 429,000 contracts to break into the top 10 today. That is nothing to sneeze at. 450 for us, listeners, is our threshold of a certified banger. So if we waited another 5 or 10 minutes, we'd definitely be there. Got to keep rolling with the show, though. At number 10, it's our old pal Oracle. Man, this one has been fascinating to watch post earnings blip, 100 handles. That's not a blip, but just massive move out there, because the instant it rallied, all of the paper was fading the hell out of that. It was par puts. There were 35 handles out of the money the first day we started tracking them on the hot options report. They ended up expiring about $8 in the money. Was a hell of a trade. And now Oracle, I say all that to say Oracle number 10, 429, selling off again, 291.5, off about nearly $17 or 5.5%. I think some analysts coming out this morning saying this massive bump we've seen in Oracle is way overdone. So that's kind of hitting the stock out there today. Also more sellers than buyers, listeners. So yeah, just wild stuff. This trade around the par strike in Oracle has been fast and it has been furious. And if you were deft, you could have made money on both sides of that. Whether you can make money above it right now for a little bit, we'll see. But it was wild how many people were fading when the stock was closing 335, 340 in that range and only had a few days to go. How much money was piling into those par puts was wild, and how much they paid off was also wild. So fading Oracle in the near term was the play. Then it rallied a bit. We'll see if this next fade is the way to go. As it keep on going to number 9, AMD. 160, pretty much exactly, off almost a buck or about 0.5% out there today. Good for number 9. 430 out there. Number 8, good old CoreWeave. We haven't seen this one on our radar for a while. They also, everyone's striking deals with OpenAI now. $6.5 billion. It's starting to become a little bit rote out there. Usually spending money is bad, listeners, right? Spending money, investing, whatever you want to call it, when companies have huge expenditures, the stock should go down commensurately. But if you spend that money on the magical letters of AI, guess what? It's a multiplier. Your stock goes up. It's this weird, I won't say the B word, but it is this weird magical force around AI out there. CoreWeave, not feeling that today, though, interestingly enough. 129.35, off about $4 or 3%. So apparently this $6.5 billion deal with OpenAI not doing it. I'll have to go dig in to see exactly who did what out there. But number 8, CoreWeave. Number 7, the Amazonians, 218.88, off $1.30 or about 0.6%. Good for number 7, 583. Number 6, it's the Fruit Company, managing to rally in the midst of all this. This has been a weird run for Apple. Apple is pretty reliable, buy the rumor, sell the fact. And they did that. They rallied into their announcement. They sold off hard after the announcement, which is kind of what they're supposed to do. Is what they've done all the time. And then once the line started forming for the iPhone, people started saying, oh, wait, maybe this isn't the kind of boring mad that we thought. People actually want this thing. And now the stock's been running again. 253 and a third, up about $1 or nearly 0.5% today. So nice little run for them. Number 6, 622 on the tape. Certainly looking good post-stock buyback. What was that around? 175, somewhere at that level. A wild stuff. Palantir, speaking of wild stuff, number 5, 654 on the tape. Trading 180 and about a third, up about $0.75. Looks like, actually, I'm going to just re-rack that now. Trading, this thing flies all over the place. 179.80 now, up about a quarter. So kind of unched after oh my God, it's at $10 range already today, listeners. 184.32 to the upside, 174.29 to the downside. So Palantir doing kind of the reverse of its usual trade lately, which has been sell off harder than rally. Today it rallied hard and is now selling off. Either way, it's good for action. Number 5, 654, listeners, is Palantir. If you're trading Palantir intraday, you are not bored. I will give you that. My goodness. Number 4, speaking of not bored, Open. We could play a game. Where the hell is Open today? Open, number 4, 818,000 contracts, 879, up about half a buck. Man, it doesn't seem like that long ago we were talking about overriding the 2 halves and the 3s and the 3 halves and the 4s all the way up to 7s, 8s, 9s, 10s, 11s, and then back down, buying puts, 7 puts, even 6 puts. And now 879 out there, listeners, is where it's hanging out right now, up about half a buck. So this name is just is absolutely wild. Number 4, 818 on the tape. Have you been playing in Open land? Wild stuff. Speaking of wild, we're continuing our wild crew here. Number 3, it's Intel. 1.36 million contracts. That is absolutely. Oh, you know what? We've got more speculation. It wasn't enough that NVIDIA owns a piece. And now we all own a piece. Congrats to all of us, 10% owners of Intel. And a little bit of SoftBank love. Why not throw Apple into the mix as well? Why not? So that's what's popping it today. 33 and a third, up a little over $2, about 215. Nearly 7% for Intel today. So a hot day in Intel land. As we keep on rolling to number 2, it's Tesla. Right around 428, off about $15 or 3.33%. So not looking good for the 430s we were talking about on the hot options report earlier this week. Also not looking good for the 440s we were talking about yesterday. Those seemed kind of wild yesterday, and in hindsight now, they're not looking great at all. We'll see. Another session to go, obviously, but if you know with Tesla, they were not giving those away. I think those 440s, I want to say they were trading for $7, somewhere in that ballpark, so that makes that even more painful. Number 2, Tesla, nearly 1.5 million contracts. You know what the big dog is out there today, listeners. It's NVIDIA, putting up usual NVIDIA numbers, about 2.2 million contracts. Trading 178.15, managing to rally today, up about $1.15 or 0.2%. So nice little pop out there for NVIDIA today to buck the trend of most of the rest of the market. Earnings-wise, not a hell of a lot going on out there unless you were super jacked about Accenture and CarMax before the bell, or Costco after the bell out there. Of course, if the administration and maybe the SEC have their way, we won't be having these regular check-ins with earnings anymore. Hint, hint, check out our question of the week about more of that right now. We had Micron earlier this week, and folks were slinging paper fast and furious on that. The 190 calls, I do believe, were trading fast and furious going into that announcement. Spoiler alert, they didn't get anywhere close to that. I think they were trading for $2, too. That was absolutely wild. A screaming sold to you, if ever there was one out there, listeners. But still some fun stuff popping off on the earnings front. And because we like you folks, all that data still up there, still available for free, theoptionsinsider.com. In case you thought this season wasn't biased enough towards the buying, it just jacked up even more, listeners. Our season report now hanging out 125%. My goodness, that is just a wild number. That's above our long-term average of 119%, which is already wild. And if you don't know what any of that means, check out our advisor's option from this week. Should be hitting the network. Pro folks already heard it. I did some discussing with Matt about these numbers, and lots of fun to be had. Speaking of fun, it is time to unleash the Flowmaster. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, it's Thursday. We got to unleash the beast that is the Flowmaster, see what he's fixed his steely gaze upon, listeners. Let's go out to the land of one of the EMs. You've talked about uranium a lot, not so much about lithium, but we're going there first here this week. This is Lithium Americas Corp, ticker symbol LAC, L-A-C. I do believe this is a newcomer. I don't think we talked about this one before. Trading $7.01, up $1.01 today, or nearly 17%. So a nice day for Lithium Americas Corp. Trump, the administration taking equity stakes in these. And this is kind of the discussion about maybe should we have a sovereign wealth fund? Should we be taking equity stakes in these things? Well, looks like it might be happening. Hence this massive run here in the stock. It is up 115% or 3 3/4 just in the past 5 days. It was trading about $3 exactly just on Tuesday of this week. So just in the last few sessions, it's made this massive move. On the year, it is up $4.50 or 190%, pretty much most of that based on this rally we've seen right now. You know, for the rest of the year, lithium hasn't been doing great. So it's been kind of an interesting trade out there in lithium, but apparently this name feeling its oats. And Mr. Flowmaster, are you perhaps suggesting that perhaps there was some skullduggery afoot in Lithium Americas Corp, sir?
Well, no, actually, this is a little bit more of an opposite case. So you mentioned on open, that we could have been selling, high volatility 4-strike and 5-strike calls, until the stock ran up to 10. So this one, it stock's exploded as you noted, because I guess us taxpayers want to own it. And so whenever we see a big move, I go back in time and look in Trade Alerted a few days ago. And what's interesting is on the 23rd, so on Tuesday, the call volume was heavy, 11,000 calls versus 1,900 puts. And that's usually like, ooh, we're going to find something, maybe a little bit funky that could have been a tip-off. In this case, it was the opposite. What the trade was on that date was a seller, led by a seller of November 4-strike calls for 15 cents, about only 2,000 times. But it was a very clear seller. You could see it in the open close data. Seller, customer selling. Stock was 319, and they were November. So, not probably something. I hope maybe it was somebody that owns a chunk of the stock and was kind of tired of waiting for it to not really do anything. The next day, we can see the trade where they covered them basically in the same, very similar sized footprint, and they had to pay up to $2.40 to cover these calls. And that's when the stock was up at 5.5. And today the stock is 7 something. So in the end, it's like, you know what? They said, this sucks. I'm going to take my $400,000 loss on this little trade. But they did save themselves the next dollar, basically. So to me, we always kind of talk about small premium options, and we see people sell them sometimes, and we kind of wonder, because after fees, are you really getting that much out of it? Even assuming that things are relatively efficiently priced, if you're only getting 10 or 11 cents for kind of the opposite side of convexity, it's dangerous. And this is a case where we see they basically got hit pretty hard. They covered it, and hopefully they'll live to trade another day.
Wow, that's an unfortunate one to sell those the day right before that call. I thought you were going to tell me that someone may have gotten the call and said, oh, load out. That's what you'd expect, not someone overriding these for 11 cents or whatever, right in the face of its biggest move maybe in the history of this name. Wow, that's he got the wrong call, Mr. Flowmaster.
Yeah, exactly.
So there you go, listeners. It's not just you who steps in front of the freight train sometimes. Sometimes it's somebody who thinks they know a little bit about something, and then in truth they know exactly the opposite. As we keep on rolling out to a name we've talked about recently, this is good old Bit Digital Inc., ticker symbol BitBit, BTBT. Trading $2.95, off about 20 cents or 6 1/3% today. On the year, it's off about $0.50 or about 15, nearly 16%. Looks like its high was nearly $6, 5 3/4. This is back on November 11th. So right in all that post-election euphoria for crypto, it hit its high. Then they came to smoke it. They crushed it all the way down to $1.69 on April 8th. Then they had a nice little run again, July 16th, back up to about $4. It actually hit $4.01 on July 17th, and then right back down again, $2.50 September 4th, and kind of been trending up over the last month, up to about, it hit $3.15 earlier just this week before trending back down to $2.95. That said, Mr. Flowmaster, what'd you spot out here in BitBit?
Yeah, so this is kind of an interesting one, and I'll tell you now, it's like, I assume I'm not the only one thinking of it, but if if the government is starting to take little stakes, and there's going to be a new one every week or two, whether it's, through strong arming or I guess some sort of strategic. I mean, in the end, I think we're not paying anything for these stakes. We're just kind of trading some sort of regulation that the company is interested in. But so, this is a Bitcoin miner, and it's only a $3 stock. However, there is a pretty big block today of 10,000 of the 3-strike calls bought in a pretty aggressive sweep through the 35-cent offer. So their average price was 35.5 cents. It is opening. This sweep had 87 pieces across 18 exchanges. And what's funny is, we've done this for a long time. And so the size of the trade is a 10,035 lot, which seems kind of weird, like why the 35? And it kind of shows you how the aggregation of sweeps works, is there is no official designation of a trade being a sweep. There is a condition code called intermarket sweep, but it still doesn't tie them together. And not all the exchanges use it, and it's actually an optional tag. So I am guessing the 35 lot that got it up to 10,035 was one of the sellers who had some sort of logic built into their risk management system that says, if it's a pretty big trade, just try to get me out. So they probably were one of the sellers below 35 cents, and they paid up to get out of it. But on the day we have 32,000 calls. That's 50% above normal. It's a Bitcoin related name, so it's always a very high. Like the average put call is almost like 8 to 1. But it's somebody, looking for some upside. It's just in October, so they only have 3 weeks on these. But the 3-strike call, maybe they'll just get some, opportunity to trade the gamma all over the place.
I was just checking here what we talked about this name last. It was on the July 7th show, listeners. And we talked about good old BitBit. This is an ETH treasury name. These are starting to pop up all over the place these days. ETH pretty hot. We talked about at the time someone loading up on the 3.5 calls expiring on August 1st for a whopping 75 cents. That was a banger. The stock was $3.70 at the time, so they were nearly 20 cents in the money. Maybe that makes them a little bit more palatable for you, but still a hefty price to pay for calls that were less than a month out. Didn't even get you earnings. Earnings were on August 18th, and it doesn't look like those were a home run, listeners. The stock was closed at $2.72 on August 1st. I'll have to go look and see if they closed or rolled them, but I'm guessing probably not. Looks like that 75 cents went to die 3,000 times out there. So that was a bit of an ouchie. Maybe these OC3s will have a little bit better sentiment out there, a little bit better luck out there. Have you folks been dealing and dabbling and nibbling at BitBit out there? I don't know, kind of interesting stuff. Speaking of interesting stuff, we'll get out of here for this week on good old Goodyear tire. We were just talking about them not that long ago. In fact, I think we spotted the same print that the Flowmaster spotted out here. Goodyear, they've been all over the place. They've been up, they've been down. I think we just talked about them, as I do recall, on the Monday show. Yes, we did. I thought we just talked about them on the Monday show. To be precise, we talked about the Nove 10s going up 6,250 times for about a quarter. And today looks like we're keeping the party alive out here, listeners. Going to the Nove 9s, going up nearly 10,000 times today as well, 9,735 times. Lifting the offer for 35 cents. The stock was right about where it is right now. It's $7.90 right now. It was $7.95 when this trade went up. You've been following Goodyear. It's been a tumultuous year. It's had a high of $12, and the low is pretty much right here, $7.80. So again, if you're looking for bottom fishing, maybe that's what some of these call traders are doing. There are earnings, as you mentioned on Monday with the 10s. There are earnings in November. We were kind of lamenting, myself and the Rock Lobster. We thought maybe the 10 was a bit of a bridge too far. I mean, it's a tire company after all, not the sexiest of things, but it has been known to bounce, pun intended, on occasion. And maybe they're looking to catch one of those right now. Mr. Flowmaster, what'd you spot out there in GT this week?
Well, yeah, I didn't realize that you'd put it in the notes as well. So we both noticed. We didn't both notice the same trade. So this is a buyer of just about 10,000 of those Nove 9 calls, paid 35 cents. it executed via auction, meaning it was brought to the floor by a liquidity provider who was willing to sell it, but happy to have somebody else jump in, and that's what they got. And I actually bought a little bit of stock on this print just because it is very beaten up. I kind of think I've lost money in Goodyear in the past, so but don't we all need tires? It's just kind of a to me it feels like a bottom fisher. Total of 11,600 of these things on the tape. The volatility is higher across the board in there. The put call skew is kinked a little bit more to the call side. It's actually one of the flattest levels that we've seen. So I think this is worth not a big position at all, but like I said, I think I've gotten hurt in the name before, but downside is $7.95 from here, and I think somebody's looking for it to kind of recover a decent amount.
Yeah, I definitely like the 9s for 35 cents, a little more than the 10s for about a quarter out there, especially given this stock and some of its challenges it's had of late. You definitely want to put some more strikes in your favor whenever possible out here. So if you are looking to take a nibble, and maybe like myself and the Rock Lobster, maybe you were a little lukewarm on the 10s on Monday, listeners, maybe you like the 9s for 35 cents a little bit better out there. They're trading around there, and you do get the earnings. So if you're looking for a little bit of a catalyst, maybe that will be your huckleberry out there, listener. You know what? Since we got a little time, let's try to. We got so many trades that we've been tracking out here. Let's see if we can find a Flowmaster special that we can pay off. All right, how about this? Let's go back all the way back to April 24th of this year, listeners. Who can even remember such times? We were just starting to rally off that bottom on April 8th. Things were wild, and the Flowmaster was on the show talking about everyone's favorite Cemex SAB Day CV. This is an ADR, obviously, listeners. This is good old Cemex. This is the Mexican cement name out there. Trading $9 exactly today, kind of unched, but it's been a wild ride for Cemex. Obviously, Mexican imports kind of getting beat up. When we were talking about it, it was just coming off its low for the year of $4.89, so it has pretty much doubled since then, listeners, mostly straight up. So if you got in on Mexican cement post April 8th, you're pretty much looking at a 2Xer right now. And let's go back to our April 24th trade. Flowmaster was here talking about the May 6 calls going up for 15 cents. The stock at the time was $5.70, so it had already recovered quite a bit from that roughly $4.90 low, as I said, I should say, a few weeks before, rallying nearly $1 off that low. So they were pretty quick on the turnaround here with Cemex. $5.70, we were talking about the 6s going up for 15 cents, 5,000 times. They ended up doing a total of 7,600 on the day, so they liked those bad boys. Worth noting, it looked like there was some earnings baked in there as well, so they got a bit of a nibble for earnings. So again, not the worst trade at the end of the day, a slightly out of the money call, only paying 15 cents for them, and you get maybe some earnings in there to boot. Seemed like a decent roll of the dice, and they appear to have worked out, Mr. Flowmaster. The stock closed on expiration, $6.85. These calls all still open on expiration as well, so it looks like paper printing a cool $350,000, sir. Not a bad do. Who thought cement could be so sexy, Mr. Flowmaster?
Well, it's kind of interesting. I mean, you got to wonder. I'm just looking at, that SPX around that time was under 5,400 still, right? So, I wonder if you could have bought almost anything and made money a few weeks later. So, sometimes it's just nice to be lucky. Now, obviously, it's a Mexican name, so it was directly tied to expectations of some tariff relief, and it's exactly what they got. So, but it was after. It was already he'd already paused everything. So, the names, like situations like that, I'd love to kind of go back and say, okay, really between that date and May 16th, how did Cemex outperform, or really was it just kind of the entire market went up and person used calls for, what they're good for, which is, long exposure with some convexity.
Good stuff indeed. Do you folks have some good stuff in store for us? Let's find out. A little bit of the old Thursday mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. I'm just checking out a lot of talk of fantasy football trades in our chat today. Folks talking about Overby and the Queen running. I think I might be tied with Overby, but the Queen, I think the Queen is undefeated. Someone needs to stop her. She's on a rampage out there. But let's see what's rampaging on our questions of the week right now, shall we? Let's go out to our question of the week. Remember I said earlier we're going to come back to this. This is our live question of the week right now. We asked you quite simply, there is a movement afoot to change the corporate earnings cycle from quarterly to twice per year. There's a lot of reasons for it. Some people argue firms get too myopic on the short term if it's quarterly, and I could see an argument for that. But that said, the options trader in me certainly likes more things to trade rather than less. The content creator in me certainly likes more things to talk about than less. And then also the diehard skeptic and cynic in me does not want transparency to go away. We need more transparency in these markets, not less. Especially right now with all these skullduggery going on and government taking an active hand in the equity markets, and more so than ever I can recall before, buying literal stakes of companies. With that kind of stuff going on, you need more oversight, more transparency rather than less. But you know what? You folks are the ultimate arbiters, not me here on this network, despite what the Rock Lobster calls me, the benevolent dictator out here. So we put it out to you folks. What do you feel on this issue? Do you agree? Should we go to twice per year? Should we keep it quarterly the way it is now? Or should we go the European route, just get really draconian once per year? One check-in per year is fine. Uncle Mike, you and I chatted about this briefly on Monday. The poll had just gone live right as we were kicking off the show there. So we have a few more days under our belt. You've also had a few more days to mull this over. What are your thoughts on this poll? Do you have a choice? And then B, where do you think our audience is lining up, sir?
Quarterly on both. I'm thinking, the more I think about this, at first, I'm one of the few option traders on earth that doesn't look forward to earnings. It's a hassle to me. I have to put on hedges. I have to do this. I have to do that if that's what I want to do with individual stocks, or I have to just sweat it out. I don't like them personally, but for the good of our markets in terms of transparency, in terms of liquidity, and of course, in terms of Options Insider Radio Network content, I think it's good that we have them quarterly, because if we're just motivating corrupt accountants to slip stuff under the rug for 3 more months, if we go to twice per year, yeah, let's keep them quarterly. I'm really a fan of keeping them quarterly.
Look how much skullduggery goes on now, and we have quarterly reporting.
Right.
Imagine the madness that will go on if we switch to semi-annually. Mr. Flowmaster, same question for you. What is your vote? And more importantly, where do you think our audience is lining up?
Well, it's a really interesting question, right? Because, I got my undergrad in economics, and, we're all about, transparency, and information is what makes everything work. And, talking about, only twice annual earnings, that's a lot less transparency. At the same time, it's also it's a burden for companies to prepare earnings, results and calls, and do that every quarter. And I did check with ChatGPT to kind of just say, hey, what would the impact be on volatility in general? Because as an options person, that's how I think. It's funny. The basically you'd have, with only having 2 earnings, you're really only going to have those two kind of dislocation gap moves per year instead of 4. So that kind of dampens volatility. and that actually carries into the index as well because of the fact that the earnings are not timed together. But those moves are going to be bigger because you're definitely going to get bigger surprises. So it's really kind of unclear. I think that at a fundamental level, though, Cboe, one of Cboe's mottos is, we build trusted markets, right? You want people to be very confident that they know as much as they need to make decisions. And I wonder if earnings don't come out for another 5 months, how that might change people's decision making. They may say, well, you know what, I'm going to wait another 5 months because I kind of want to have the freshest information before I trade. So I wonder if it would kind of cluster activity. In general, I think it's a bad idea. I think that there are shenanigans that go on, and these quarterly earnings is what kind of gets that onto the table. So I would keep them quarterly. I think our audience is actually going to want quarterly too, because I think it's better. I think the only real beneficiary of biannual earnings would be kind of the companies themselves, but I don't think it's in a way that adds a lot of value to the enterprise.
No, definitely not. And
the other thing to add to that, Mark, if we were going to go to twice a year, I don't want it, but if we were doing it, I'd like to have it set up to where we still have 4 earnings seasons, to where, let's say, Apple does it the first quarter and the third quarter, and then Amazon does their earnings the second and the fourth quarter. So that way we can still get some type of transparency, because if, let's say, Lowe's has bad earnings in Q2, you know that Home Depot is probably going to have bad earnings in Q3 or something like that, to where it could still help the market participants that way. But overall, that would be a slightly less worse idea if we were to do it that way.
And at least you get some more data points throughout the year, and we get some more stuff to trade and talk about here on the network, which is the important thing at the end of the day. And right now, our audience agrees with us. 53.8% say they want to keep it quarterly. 28.2%, more than I thought, saying twice per year is fine, including one of our pro members, Mr. Age of Delaquarius, chiming in. He says January and July would be fine. I see him floating around in the chat today. So he is a anti-transparency advocate. He wants less transparency, not more. And then nearly 18% of our audience, must be all the Europeans beaming in across the pond, they say, how about once per year? So that's kind of wild. So we do have an interesting diversity of opinion, even if it is over half. The majority still say keep it the way it is right now. That'll keep running through tomorrow if you haven't voted in there. By the way, our question of the week from last week, we asked you how long you folks have been trading options, and final numbers here, north of 5 years took it 64.6%, followed by a tie for second between 3 to 5 and 1 to 3 years, 16.7% each, which is kind of weird. And less than about 2%, actually, 2.1%, going for less than a year out there. So interesting stuff out there as we keep on rolling and go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, and as we're coming into the end of the show here, looks like the sell-off is intensifying a bit. S&P off 0.75%, Dow off 0.5%, and NASDAQ off about 0.85% now. And VIX Cash kissing a 17 handle again, 17 exactly right now, as we're winding down the show. So Uncle Mike feeling more uncertain about his future. Again, I might have to send out the proof of life folks just to check on him. Uncle Mike, how are you holding up as the sell-off intensifies? And what are you keeping an eye on till the Monday show, sir?
I'm hanging in there. Continue to keep an eye on bonds, all-time highs in metals, and any presidential social media tweets that come out, as per usual.
Mr. Flowmaster, same question for you. What are your thoughts here as it was selling off a little bit more? What are you keeping an eye on till the next show next week for you, sir?
So I'm pulling together the updates for the Q3 state of the industry. I did just refresh one of that, my first slide, which is just kind of size of our market, and I'm really kind of blown away by notional value we're seeing on a daily basis now is $3.7 trillion. That's up 31% over last year. Some of that is from the fact the market's higher, and some of that is the fact that volume's up 22% year over year. So I'll be watching macro things. Like I said, this pullback so far doesn't bother me. I feel like things were a little, I'm not much of a technician, but it felt overbought because the assumption that the market would just go up no matter what was happening was holding. And I don't think that's the healthiest thing. So, but generally watching the macro picture, watching for whatever else comes out of Washington.
See who we're buying an equity stake in these days. We shall see out there, listeners. That music means we've come to the end of this fun sojourn. If you need more fun in your lives, don't worry. I'll be back in a little bit to talk all things futures, options. So we got some futures talk going on here in the chat right now. So futures options coming up in a little bit. Who will join me on Twyfo? I guess you got to tune in to find out. But before we go, let's go around the horn. Mr. Flowmaster, sir. If folks want to check out all the cool stuff you guys have popping off over there at Cboe, including a few new products, sir, where should they go? What should they...
Yeah, we got all sorts of interesting new things, and we announced in Las Vegas at the Hood Summit, we announced the Mag 10 index options and futures. So those. I think we're looking at November launch for those. But Cboe.com/RMA is where we have all of our data and platforms, and just take a look around Cboe.com in general for things that we have going on, and our insights section actually has a nice letter from Kathy Clay, who was at that Robinhood Summit, and her thoughts on the retail participation in our market.
There you go. Lots of cool stuff. Check it out. Cboe.com is the place to go to begin your journey to the dark side. If you want to go straight to the Flowmaster's goodies, Cboe.com/RMA. And then someday in the very distant future, you can go to Cboe.com/Trade of the Day. And that'll be there waiting for you, but not anytime soon, I don't
Better
think.
get that. I'm working on that.
I'm just going to keep twisting that knife just for fun. Just for fun out there, Mr. Flowmaster.
Fine.
But check him out over there at Cboe.com to begin your journey. And Uncle Mike, sir, if folks want to begin their journey with you, I see you're getting some love in the chat. They think you need a little bit of help in the fantasy land out there, Mr. Uncle Mike. If folks want to get in touch with you to give you their well wishes or perhaps to check on your well-being on a red day in the market, where should they go? What should they do?
Well, first off, if we ever do get Cboe.com trade of the day, I'm putting a direct link on my site to that. No question about it.
Nice.
With that being said, if you are looking for a financial advisor who is in the option world and who has hedges on and covered calls on right now on days like today, reach out to me. Go to stcharleswealth.com. Book an appointment with me. I always enjoy talking with our listeners.
There you go, stcharleswealth.com, the place to go to learn more. Hang out here if you're hanging out in the pro. We'll be back in a little bit with none other. I can't keep the cat in the bag anymore. None other than our good buddy Dan the Man Gramza. So strap in. It's always a fun time when he joins us on Twyfo. Who knows what products we're going to get into, what crazy rabbit holes. He can speak on all of them. It's a fun time. So if you're hanging out in the pro, just hang out. I'll be back in a little bit to unleash Dan upon you. And then if you're not in the pro, what are you doing? TheOptionsInsider.com/pro. Kind of a wild one this week. That unusual activity research dump from Dr. Vix alone was kind of worth the price of admission. That was a fascinating. I could have talked with him on that for a couple of hours on that. So that was fascinating stuff. Our pro members already got that. TheOptionsInsider.com/pro. Of course, back again with Twyfo. Back after that for the Hot Options Report. Then we're back again tomorrow to talk some vol. Who's going to join us on Vol Views? Well, you got to tune in to find out. It's been quite the fun crew of guests of late. And then after that, one final time for our pro folks, we gathered together to talk unusual activity on Options Oddities before we wind up the day one final time with the old son of Odin himself, Thor, for the Hot Options Report. Then we're back again on Monday for more fun trivia battles. Another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.